Hello everyone, welcome again to my YouTube channel. André Cardoso here. Thank you very much for being here as always. It's a pleasure to share my views inside the market with you. I hope you enjoy my previous video. Some of them still working in the directions that I was expecting, at least some of them. Let's see if that will continue. And for today I want to share also some of my red list for today. I want to share some of the patterns the market may form, at least with those who are learning process. That's my objective here, is to share some of those patterns with those who are learning process inside the market and out trying to understand how the market behaves and how the price behaves, and specifically how to trade those patterns. So I want to invite you into this journey, and I hope you enjoy at the end. I hope you enjoy this session for today. And as always, I search for advanced pattern formations inside the market. Sometimes they work, sometimes they don't work. The best part of that process is that allows us to identify our targets and allow us also to identify our limits. We already know where those patterns will invalidate, which allows us to manage our risk reward for every single trade that we want to get involved with. So let's start with, I want to start with Ethereum, actually Ethereum and Bitcoin. Just to share one of the patterns that I share with you on Twitter, I believe, at least for those who are following on Twitter, I shared this as a potential heads and shoulders for Ethereum, which is now facing the default target projection. So as soon as the market finds this price zone, it has found some pressure. We don't know if the price will bounce from this zone. That's not granted, of course, but at least for those who are shorting the market, it's a nice price zone to at least to start to partitioning your trade, or even to exit your trade and to start to think about the next process for the cryptos, or for in this case for Ethereum. So golden Fibonacci also, so nice pressure zone here for Ethereum. Let's see how the market will behave there. If you go into a lower time frame for Bitcoin, I was expecting the formation of this bearish pattern above before the price. We were trading 58,800, I believe, something around here, when I saw the price approaching not only the default target for these head and shoulders, these inverted head and shoulders on a lower degree, but we were also approaching the 88.6, and I saw that as a potential opportunity to get involved on a short side, but the market has decided to, this time, no, I don't want to form that for you. So the market starts to fall, and at this point, actually, after breaking these previous lows, it's very dangerous for me, at least at this point, to get involved, or at least to suggest any kind of involvement, because I don't trade, specifically I don't trade the cryptocurrencies. I just make I just provide my analysis on those, but trading below these previous structural lows is always a risk. We have now the price acting, using that level as a resistance. So let's see if the price recovers above that zone. If not, we have also the 224% Fibonacci extension below, a few points below the golden fib, which may offer some pressure for Bitcoin. Let's see if that price zone will offer us some pressure at 224% Fibonacci extension level. It's a minor bullish shark pattern projected below support. So, and that's it for now. That's what I have to share with you for Bitcoin and Ethereum. So I also shared this one. This is Dow on a 4 hours or a 2 hours time frame chart. Now approaching the 200 moving average. On a 2 hours time frame chart, we are now approaching the 200 moving average. as a potential element of in this case of support. Let's see how the market will behave there, but we're still expecting a deeper fall, let's call it a deeper fall into this 50% Fibonacci retracement level. So I shared this as a potential shark pattern, printed a 224% Fibonacci extension level after a false breakout below. So we have a first swing low, the retracement or the pullback, and then an extension with the price rejecting to close below the 113% Fibonacci extension from this swing. So this internal pullback extended below. So we search for a close between the 113 127 extension of this swing that will confirm the potential false breakouts of the previous support zone. That will only be validated as soon as the price breaks above the resistance. So that will confirm one of the criteria for the shark pattern that will be printed above. So this will define one of the criteria for the shark pattern, and that will also confirm a false breakout above the resistance. So if the market, what it means is we can use this Fibonacci extension level to identify the potential violation or a potential false breakout or the potential false violation of the previous structure support zone. And if the market confirms that with a violation of the previous support, that should trigger a bounce, that should trigger a nice involvement for a bullish momentum. So that is not a pattern, that is just a price reaction that we expect after confirming a false breakout above or below, in this case below. So we wait for a violation of these highs to confirm that, and we wait then, if you don't want to get involved in this process above, of course, we wait, or at least we should pay attention to this 224% Fibonacci extension. If reached, it may put some pressure. So we expect nothing more than a 50% retracement, which will complete, as I said before, the bullish 5-0 sequence. So if the price decides to achieve those levels, that will also complete the bullish sequence at 50% Fibonacci retracement level, and that may also offer one eventual bounce from these levels. We don't know the magnitude of that bounce, but since we are trading a super bullish trend, I will not be surprised to see a retest or one attempt to retest the previous structure highs. SPX 500, exactly the same. We shorted these. I shared these among my subscribers. I shorted these before the price starts to fall more aggressively. So I saw this very dark bearish candle, and I decided to get involved somewhere there, somewhere around this candle, and then we wait for the next movement, of course. So we wait for at least a 38% Fibonacci retracement to be reached. I set my first target at 38.88, so this was a 38% Fibonacci retracement level projected there. As soon as the market achieves those levels, we break even our trades and we start to partitioning our position, or our initial position size. We start to partitioning that same position. So at this point, I have a second target for SPX 500 at the golden Fibonacci retracement level around 38.25, I believe, but we should pay attention to this price zone. So we have at 127 and the 1618 extension, both as potential pressure elements. So I'm paying attention to these at 38.46. So that will put the price trading a few points below the 50% fib. So, or let's say 38.45, 38.46 golden Fibonacci extension level, which may also offer some pressure. Note that we are also approaching these previous trend line resistance, which may also actually work as support or as an element of support. Let's see how the market will react. Now, crude oil, I shared this before. I'm going into a higher time frame, like a daily, or let me show you first of all the weekly time frame chart. So I have projections at 112 previous structure highs back to 2014. And the reason why I have projections there is because if the market decides to print this right shoulder, it may trigger later in a mid-long-term projection, it may trigger one inverted edge and shoulder. So this will be our left shoulder, and a deeper fall may offer us a nice right shoulder there. So of course we will try to identify the best another pattern to get involved in that process as soon as the market starts to approach that level. But of course what I want to share with you is that symmetrical projection that I shared before at the previous projected at the previous structure high. So 65, 66 previous highs from June 2020, and as soon as the price starts to approach this price zone, we have kind of, as you can see, this is kind of a symmetrical projection. The 38% Fibonacci retracement also here, so the 38% Fib from these previous highs from 2000, actually let me correct this, from exactly 2008, so this is a 38% Fib from the previous highs from 2008. So that being said, it's a important Fibonacci level. So on a daily, we have a symmetrical a symmetrical pattern printed right at that price zone. So we can expect a deeper retracement for crude oil. So I'm not saying the market will print something like this magnitude of a retracement. It can happen, and if that happens, we will pay attention to the development of the potential formation of these edge and shoulders, which will only trigger above the previous resistance. If the market decides to recover above this resistance and to trigger the pattern, that may offer upside momentum for crude oil and oil in general. Let's see if that will happen. So for now, symmetrical projection, we wait for the retracement. Of course, we will pay attention to the Fibonacci retracement levels. The one that I will pay attention, 46.27, the 38% Fib, but of course we have also the 38% Fibonacci retracement, the 23% Fibonacci retracement, the very first Fibonacci level at 54.52. So as we can see, the market before, very shy retracement here, small retracement back to the 23, also using that level as a support. So let's pay attention to that possibility. This will put the price also very close to this previous structure pressure zone as support. So that will put the price very close to this zone. If achieved, I will not be surprised to see a similar behavior at this price zone, with the price forming kind of a right shoulder there, but I will pay attention to a deeper retracement, and that may print us then later that right shoulder. Of course, as I said before, we will search for the best patterns to get involved if the market decides to form that pattern for us, to get involved into a bullish process if that happens, and if that seems reasonable at that time, if it makes sense. Let's see, and observe. But for now, that's what we have for the crude oil. Now gold, I shared these on a lower time frame as a potential edge and shoulders. We have targets for the edge and shoulders pointing to the previous structure support and daily fractal support in fact. So we have default projections there at that support level, but also one eventual crab pattern projected at the same price zone. So gold, when compared with silver, for those who are also following silver, holding quite well, comparing with his brother, let's say, which has been trading very, very heavy recently. So gold, eventually a violation of this previous structure support level and the violation of these 200 moving averages, for now acting as a potential element of support. If the market decides to break below, I believe the market will search for, at least we'll try to search for a retest of the previous lows. That should be followed by more upside momentum for the Dixie, and eventually we will see the formation of that shark pattern also at 92.94, 224% Fibonacci extension of this swing, this very last swing low projected above. So we are now trading a few points above the golden Fibonacci, so we are trading the range, or between the range, for that bearish shark pattern to form. So I will not be surprised to see a retracement or a pullback on the Dixie around this price zone. So if the market decides to print that shark pattern, the default target for that pattern will be 92.12, which eventually will put the price back to the 200 moving average, which is now covering these lows. So if that happens, eventually we'll force the price to search for that moving average again. So that's wait and see. Of course, at this point, and taking into consideration the eventual cup and handle that I draw here, some of you may be asking, that should not, it's not triggering the cup and handle. Eventually it is, and nothing assures the market will rally above these previous structure highs without retesting without a retest of these resistance. But I will not be surprised to see that shark pattern printed above acting as a pressure zone, and then forcing a retest of this neck zone, or this resistance zone for the neck and the validation point, and eventually even a penetration of these levels, so the market falling below these levels, threatening the recovery of the resistance, and then a bounce. So that being said, I will wait for a retest of the neck zone, a retest of this resistance, and a clear rejection. So if that happens from the structure highs and the resistance level, we never know. In the market, eventually it will print only a shy retracement, a small retracement back to resistance, and then new highs. But of course, after the ratios presented and after printing the shark pattern, we expect a bit deeper retracement, which will print the bullish shark pattern again, as I shared before. The bearish shark pattern, when at target zone, will offer you the bullish 5-0 sequence. So this may act as a potential. Actually, let me correct this, because actually we missed we are missing the handle here. So I'm talking about one possible cup and handle without a handle actually. So that's not the point here. So let's ignore these last 3 minutes, please. So we don't have a handle here. So if the market decides to start to fall from this price zone, I believe that we can consider this as an eventual cup and handle when the market will form the handle here. Of course, if the market forms the shark pattern, I will not see this as, I like to see the horizontal neck zone for the cup and handle. If the market decides to print this, I will not pay so much attention as a cup and handle formation, but it can happen. But well, let's see. If the market decides to fall from here to print the handle, I can consider this as a cup and handle already formed with kind of ascending neck zone, let's say. But for now, we don't have the handle formed here. I was expecting some pressure and the handle formed, and then we apply the same methodology. So let's try to just to share the concept here. So let's assume, this was my imagination working. Let's assume we have a resistance there and the handle formed with a 38% Fibonacci retracement. Let's say just to create a scenario, let's say the price finds resistance and then finds support at 38% Fib and then starts to bounce, so forming the handle. So if the market then later forms the shark pattern, the same methodology I will apply here. So I will expect a retest of this next zone, eventually a penetration of those levels again, 50% Fibonacci retracement, and then a bounce with the 5-0 sequence. And of course, if the bullish 5-0 sequence fail, eventually we will see the price eventually falling into the previous structural lows, and a violation of these lows, eventually a deeper retracement or a deeper pullback for the DXY. But get just to print just to get clear with that strategy that I was talking. If there was a cup and handle, which we don't have. So that being said, let's move forward. That doesn't invalidate, of course, the shark pattern projected above, so 92, 94, and for now, actually, we can delete this cup and handle here, because at this point, at least for me, it makes no more sense to project that pattern, because as I said before, I like to identify those patterns with a clear horizontal neck zone for the cup. So that being said, let's stay focused on this process for the next pressure zone, 92, 94, bearish shark pattern, 224% Fibonacci extension. Of course, do not ignore if the price decides to push a few points above. We need to provide some room above our entry point to adjust, to set our limits and our stops. So that being said, we have a clear ascending trend line, which we should not ignore as a potential element of resistance, but pay attention to these price zones. Now, pound versus the New Zealand, another one that I decided to share to a short. I shorted this one as soon as the price starts to fall after touching these 95.54 levels, so the bearish butterfly completion point, but also the inverted edge and shoulders default target zone. So as soon as I saw the price completing another shark pattern here, I decided to enter the trade. But as soon as I entered the trade, in the next minute, the market starts actually the market was already trading higher from trading strong when I entered the market, but I assumed that we were also trading this trend line, a potential trend line resistance, and as we can see, the market has been reacting very, very well to those patterns previously, all shared among my subscribers. Actually, some of them I pushed some of those trades, and I shared all of them among the communities I'm working with. So basically, all people who get my analysis got those charts and those patterns before the market completes those events. So eventually, this is the one that I'm sharing with you, that I shared most recently, actually, to short, and that's the one that eventually will fail. That's what it is. And the market is now printing this kind of a wedge above, so I will not be surprised to see my stops being reached. So I entered the market, as I said before, a few points around this price zone, 95.54. The market starts to squeeze even higher, so I will not be surprised to see that happen. The pound versus Australian dollar, another one reacting very well, as we can see. The only one that has failed, it was the very first one at the bottom that I was expecting, the 168 extension, failed just by a few points. even though the market has violated the previous structure support zone, and as soon as that happens, the market starts to bounce. So let's see what will happen here. We have also patterns projected for pound versus the Australian dollar around 81,500 and 82,800. So basically $1 between those two bearish shark, £1 actually between those bearish shark patterns completion points. The golden Fibonacci right above the previous structure highs may offer some pressure, eventually a relief if that pattern forms, and then later if the market decides. Actually, we can see a situation where the market prints both of the patterns. So it's not the first time. We have a couple of examples where that happens. The market will find, in this case, will find resistance on both the golden fib and then later the 224% fib. Let's wait to see what type of pattern or what type of structure the price forms. We never know what the price will form, but we can see. For now, we have kind of a range that we can draw also between these two lows, at least the most recent one. Let's see how the market will react here. So it's for now it's too soon to start to project the structure the market will respect, because we don't know that. So potential shark patterns above. Euro versus the New Zealand, very similar to the pound, with in this case with a bearish butterfly pattern, also at 127 extension. So we can expect some type of relief after this swing high. We can expect some relief. The default target for the pattern suggests a retracement back to the 38% fib, which will put the price trading very close to or near 167.36. So this is the 38% Fibonacci retracement level, as I said, the default target for the pattern. Euro versus Australian dollar, another one that I shared before, the completion point, the golden Fibonacci converging with the 88.6. Actually, we have multiple golden Fibonacci extension levels projected at the same price zone. The one that I want to share with you is this bullish crab pattern that I projected. As soon as the price starts to break or to trade below these lows, I started to project the potential crab pattern below. The objective was clear, to print a pattern above the previous structure highs, or the previous structure support and the previous structure lows, which allows us to get involved in a bullish momentum. Of course, we don't know if the market will produce this magnitude of a movement, but that's the point to trade the market. It's to try to search and to identify those swings and to try to get involved when the market offers those opportunities. So bullish scrap pattern printed at 153.06, and we have printed already, I shared it yesterday, 155.97, golden Fibonacci, 168 extension, bearish shark pattern. I was expecting, I still am, at least a retracement to the 38, but we have default targets for the pattern projected at 50% fib, 154.39. So the default target, and we never know if the market will respect that. We don't know if the market will trade those expectations, but that's what the pattern suggests, a retracement back to the 50%. And as I said before, that may also offer us a nice 5-0 sequence to trade. So I will expect the 200 moving average to act as a support, which may offer a swing or a bounce from this price zone. And as I said before, the same may happen later. If the price decides to keep trading higher, we will pay attention to the 224% Fibonacci extension. Australian dollar versus the Japanese yen. I projected this pattern as a potential crab pattern extended at 161, so I was expecting more upside momentum for the Australian dollar to 86,800. So I was expecting that bearish crab pattern to form above. But as we can see, the market has found some resistance at 113% Fibonacci extension. So that being said, as I said, I always share these ratios with people. The 88.6 for the bullish bat pattern, and let me try to draw that. Let me try to draw that for you. So we have kind of the bullish bat pattern, the 88.6. Then we have other Fibonacci ratios that we can use to identify other patterns. So basically, when I search for the bat pattern, I always search for the 113% Fibonacci extension to protect my trade, because I know it's not unusual to see the price being pushed below the previous lows and then printing the alt bat pattern, the alternate bat pattern. So basically, I always like to protect my trades. When I push a trade with a bullish or a bearish bat pattern, I always take into consideration the 113% Fibonacci extension. And if the market decides to fail those levels, to find supports in this range, inside this range, we will say eventually, or let's say usually, we will see the price being squeezed and pushed even lower or higher, in this case lower to the golden Fibonacci extension level. So this will put the price, this will print the bullish or the bearish crab pattern, and that's what I was expecting here. So if I put my default Fibonacci levels here, so we have the 88.6 as a potential bearish bat pattern. As we can see, the price has found some pressure here, not enough to produce the default expectation for the pattern, and then after finding some support, the market was pushed to the 113. So 113% Fibonacci extension, which it should always be put into consideration when we saw the formation of this W or M shape, the bullish bat or the bearish bat pattern. So that being said, I saw the potential and the strength of this momentum, and I started to project, oh, eventually the market will be squeezed even higher. Let's project this graph here. If the market decides to approach these levels, I will pay my attention into this price zone, and I will try to take advantage of that. So what happens as soon as I projected that pattern, the market decides to start to fall, and then I pushed my Fibonacci levels again, and I saw, okay, they are rejecting the 113, and eventually they will sink with it, and they did. So the market synced, and it's now trading the previous structural lows, actually the 224% Fibonacci, and forming a bullish shark pattern at this price zone. So we have supports at 82.22, and we have default, let's say a default projection for that pattern, for that shark pattern at 83.86. So I will not be surprised to see, as I shared yesterday, I believe, I will not be surprised to see a bounce searching for that 200 moving average, and eventually, if that happens, as I said before, reversal this time, bullish shark pattern, bearish 5-0 sequence. If that happens, we may see that 200 moving average acting as a resistance, putting some pressure, and we will see another retracement. As I said before, we never know if the price will offer us another strong move. We expect the price to be rejected at the 50% fib, and that may offer a small swing low, eventually a small trade. We don't know that. I always assume the objective is a retest of the closes above or below. In this case, at least that's what I point to when I decide to get involved with a 5-0 sequence. I will retest the lows or the highs. In this case, I will point to the lows. If that happens, very well. If that doesn't happen, I will try to jump my trade as soon as possible if I see the price reacting against me. So, but that's what I will target if that happens. Of course, based on the price action that we have, if we pay a close attention to this possibility, and if that happens, and if we pay close attention to this let me try to print my point here. If that happens, if the price decides to push to the 200 moving average approaching from above, we may see this as a potential edge and shoulders. Okay, it's not so clear because we have this strong push lower and then new highs and then a new low, but it doesn't look so clear, but it may act as a potential left shoulder, the head, and this will be our next zone. So this will be our support zone and next zone and validation point. So if we draw a trend line covering those lows, we may see this acting as a potential left head and right shoulder, and then the market threatening support, validating the pattern, and falling below this major trend line. So we may see the formation of one edge and shoulders here, which will threaten not only the support for that next zone, of course, but also eventually this major ascending trend line. But of course, nothing is granted, pure speculation. For now, the market can start to sink from here without printing that right shoulder, let's say. But for now, if that happens, I will pay attention to that possibility, for the possibility to form the edge and shoulders. For now, 224% Fibonacci extension as expected. As I do expect a bounce towards the 50% Fibonacci retracement level. So without talking about for now the head and shoulders, let's ignore that for now that pattern, because we need to wait for the right shoulder to form, and then we need to wait again for the market to sink into the next zone and to threat the violation of this support level. Euro versus yen, 4 hours time frame chart. Another one that I shorted and I shared among my subscribers, a short from these highs, the golden Fibonacci extension, bearish crab pattern. I'm expecting the 127.21, the 38% Fibonacci retracement level to be reached. So this is the default target for my shorts. So as soon as if the price approaches these levels, I will start to partitioning my trade. And I will put my stops at break even. Until there, I will wait. Even if the market decides to pull back and to bounce from these lows, I will wait for that to happen. I truly believe the market will trade those levels again. Let's wait and see. I can be wrong. I've been wrong a lot of times before. Let's wait and see. I will wait for very interesting swings on euro versus the yen previously, so I will wait for that to happen. I believe the market will do that. So dollar versus the yen. Let's go into a daily. Let's delete or let's hide all those draws there. Actually, let me go into a weekly. And let me draw this trend line here. Actually, let me draw not the one that I want. I want to draw this one. So we have kind of a multi here trend line resistance there, and we can see we are trading right there. If you go into a daily, we can see it right there. If you go into a 4 hours time frame, we can see it right there also. What we have here is 109.50, 224% Fibonacci extension of this swing low. So as always, an extension of this swing low after a false breakout below. And let's draw this again. What we have here, and if you check your MACD and your RSI, and even if you use your stochastic or whatever indicator you will use, you can identify those swings and the divergence and the bullish divergence between those swings, with the market printing new lows and RSI rejecting to print new lows. And then after that, after this support, we saw the violation of this major trend line, this swing, this bearish momentum. We saw the violation of this trend, and the price starting to develop and to form new trend, new bullish momentum. So basically, I call it that calls my attention to this swing, and I pushed my extension tool, and I start to measure. And I start to try to identify my criteria. So as I said before, 113, 127, support for dollar versus the yen at 113 or between those levels. As soon as the market starts to trade above this previous structural resistance, I will start to project bearish sharp patterns. One of them at 161, so I will search for a 161 at extension of this swing, and then the 224% fib, and that's the range that I will search for the bearish shark pattern. So basically what we have these major 2 swings, 3 swings low, and then the 224% Fibonacci extension level. So when I saw, of course, as we can see, the price didn't quite hit that 224% Fibonacci extension. As we can see, the price has found some resistance just a few points below. So I decided to enter the market eventually a bit sooner, because the market can actually print the pattern and then fall again. But I saw the potential for the short here, and I decided to enter the market, and I took a short after the market, after a violation of this kind of a triangle there, or an ascending wedge kind of, and I saw the violation of this structure, and I decided to get involved. So that being said, after that the market has synced, find support at 108.40, and then starts to bounce from here. So I will not be surprised to see new highs for dollar versus yen, and this is another one that eventually it can fail. So as you can see, the Australian dollar has been traded from the high, so I shared this as a potential short for Aussie versus the Japanese yen. We have euro versus yen also completing that pattern that I showed you before, actually giving sequence to that short, and actually another one, pound versus the yen, also offering a nice opportunity after printing that pattern that I don't have here. I don't know why, but I also decided to join this one printed at 113% Fibonacci extension. So I'm also involved in the cable versus the yen, the short side of this one. So dollar versus the yen, and because the DXY, the dollar index in general, it's trading a bit stronger than I was expecting. Dollar versus yen, of course, it's holding quite well above this previous and most recent support, and it has bounced from these levels. So that being said, I'm not so sure what type of pattern the market will print here, but I admit a new high, a third high, kind of a 3 drives formation with a third high, and eventually just to complete the pattern, actually just to nail the 224% Fibonacci extension level. This time that I decided to enter the market earlier, or a bit earlier than usual. Usually I like to see the market actually forming the pattern, but this time, based on the structure, I decided to anticipate my shorts, and eventually this time the market will be pushed above just to fill the pattern. But that being said, I admit new highs for dollar versus the yen, and then eventually the fall from that level. So if the price decides to form the pattern, I will target the Fibonacci levels below. If the price decides to fail new highs, so if the price decides to respect these previous daily the previous daily fractal resistance above, we may see this acting as an head and shoulders, very similar to the previous one that I showed you before. The left shoulder, the head, and eventually if the price decides to start to fall from here, eventually we will see this not as a third drive, not as a three drives formation, but as an eventual heads and shoulders formation. So dollar versus Mexican peso, very tricky one for the third time. It has offered previously a nice opportunity to get involved, but the last two trades on this one, very tricky. We shorted these head and shoulders, so we saw the retest of that neck zone, and we decided to short the market. But then later the market forms support. It can happen. We have this ascending trend line support also approaching from below, and the market decided to print this kind of a double bottom there. Double bottom confirmed with the violation of the neck zone, so the market immediately validating the double bottom as a potential reversal, and it has done that. So the market has printed a double bottom, as you can see here, and if you push your Fibonacci levels here, I was expecting, the market didn't form the 2618, but I was expecting the formation of the 2618 trade setup, so double bottom followed by the golden fib. That will confirm me a sequence to trade. The market didn't offer me that trade in specific, but as you can see, we can face this as a potential inverted head and shoulders now. So we have kind of an head and shoulders followed by one inverted head and shoulders. And by the double bottom, of course. So that being said, very tricky to trade, more upside momentum. Eventually we have default targets at 21.25 for Mexican peso, with that inverted head and shoulders. CHF, I'm also expecting more upside momentum, which makes me bearish for euro versus dollar, of course. Kind of inverted correlation between both of them, and of course the DXY also involved. DXY up, the CHF up, euro versus dollar down. So basically I'm expecting the formation of those patterns above. We have convergence between both of them, higher degree bearish crab pattern and lower degree bearish crab pattern. So two crab patterns, two different time frames, or two different degrees, let's say, but both pointing to the same price zone. So as soon as the price approaches that price zone 94.60, I will wait. I will expect some reaction from this price zone. I will expect the retracement also for CHF. Now, the Kiwi, very, very strong, of course, in a bearish momentum, threatening support and violating the support without even thinking twice. So very strong momentum for the Kiwi. I projected the 161 and 224% Fibonacci extension level as potential pressure elements. As we can see, the market is not paying so much attention to those levels, as we can see. So, and those are the default levels for the shark pattern, as you can see, the 161 and 224. So this one at 224, it may act, it may still valid for the pattern itself. We can consider this as a potential shark pattern territory. So if you enter the market at 224, probably you still position in that trade specifically, because it makes part of the process, but very strong symmetrical projections for the Kiwi, also projecting the price at 69.03, and we have a major golden Fibonacci a few points below at 68.66. And if you go into a higher time frame, and if you draw your retracement from the bottom to the most recent highs, we can see also the 38% Fibonacci below, even lower actually, 67.01. So there's a lot of room for the Kiwi. I'm not saying, actually I don't have a clear picture at this point. We have these head and shoulders, so the head and shoulders are pointing, or was pointing actually. I projected these from these lows, actually from these lows here, the support for the next zone. I believe I projected that one at 200% Fib, actually very close to the 38% Fibonacci level, so I will not be surprised to see that happen. So, but I don't have, except this projection for the edge and shoulders, we have projection at 67.46. So beside that, I don't have a clear picture for the Kiwi. I don't even know if the price will respect this symmetry, this symmetrical projection at 69.03. So let's pay attention to those levels, 69.03 and eventually the 67.46, the default projection for the edge and shoulders. Okay, let's see if that's a point. Of course, a symmetrical projection will print a pattern which we can try to take advantage from. That pattern will or it may suggest a bounce from this price zone, and eventually the 38% Fibonacci again for the Kiwi. A bounce from these levels may offer a nice attempt to recover, a retest of the support. So the broken support retested at 38% Fib if that happens. So let's pay attention to the symmetrical projection, and then later, if the market decides to keep falling, the default projection for the inverted edge and shoulders, which will put the price very close to the major Fibonacci, 38% Fibonacci level. Australian dollar versus the Aussie versus the dollar. Australian dollar versus the dollar. I shared this one before, or actually yesterday, calling your attention to the golden Fibonacci extension level right below the support. As you can see, the market's showing some resilience to break these levels. And of course, we have the range for the shark pattern between the 161 to 24. So we can expect a bounce from this price zone, and if that happens, as I said yesterday, that may offer a nice bearish 5-0 sequence again. Even though and even if that fails, eventually the 224 and then the retracement back to the 50% Fibonacci still as an option, a retest of the next zone. So printed at 224, it makes even more sense. No, 224% Fibonacci and then a retracement or a bounce back to the 50%, which will put a price retesting this ascending next zone for the Australian dollar. So let's see what will happen. And then we have the default projection for this pattern. Actually, I believe if the market fails to bounce from these levels, I believe the market will fall from that price zone. Of course, as I said before, dollar versus CHF, more bullish momentum expected. Bearish momentum expected for euro versus dollar. Unfortunately, because we entered the market at the bottom, we entered this bullish, we traded this bullish shark pattern, and then we achieved the 38% Fibonacci retracement, and then the price starts to fall, and then breaking the previous structure support level. So that being said, we are now approaching the crab pattern projected at 117.39, which will converge kind of with the projections that I have for CHF. So both of them approaching those patterns, which may converge actually on a bounce for euro versus dollar and a fall for the CHF. Let's see what will happen. And to finish with the cable, which is very similar with euro versus dollar, but actually let me check this euro versus dollar. I don't have a default. I don't have a symmetrical projection here because the market is already trading the second or the third one, two, and the third swing. Not the same for the cable. The cable we have a first swing and then we are just trading the third one. So that being said, symmetrical projections for the cable a few points below the shark pattern, the crab pattern projected at 136. So let's pay attention to this price zone also. But just to point, at this point we are approaching the golden Fibonacci extension level, which will complete the bullish crab pattern. The bullish crab pattern, if completed, will suggest a bounce with default targets pointing the 38% fib, 137.78. So that is the default projection or the default target for the crab, for the cable. Okay, so that completes my insight for today. I hope you enjoy. Of course, the point here is to call your attention for the patterns itself, for the ratios, and for what we expect for the market to do after forming those patterns. I'm not expecting you to come here tomorrow and say the pattern didn't work and I entered the trade and the market fails me because I entered the trade that you suggested. I'm not suggesting any type of involvement. What I'm suggesting you to do, and if you are not familiar specifically with harmonic trading or advanced pattern formations, is to learn, read about them, learn about them, and to learn about them you need to backtest them. You need to pick your charts, go back in history and try to identify those swings and try to identify the targets and see if the market reacts accordingly to those default expectations. But first of all, you need to understand how the market behaves. Don't expect, just because we have this, in this example, we have this bullish crab pattern waiting to complete. That doesn't mean the market will fill my expectations. And even if the market forms a pattern, we don't know the outcome of the pattern. Okay, so there is an interesting probability. That's the way I like to put things. That there's an interesting probability if you know how to manage your risk. If you don't know how to manage your risk, it doesn't matter what pattern you trade, what strategy you use, or what methodology you are trying to apply to trade the market. It doesn't matter. You will fail for sure. It doesn't matter how many time it will take. If you are a very lucky guy or girl, you may take a few trades and make a lot of money, but as sooner or later, if you're still trading the markets without knowledge, without a pattern to trade, as sooner or later you will lose your capital if you're still trading the market. So in my opinion, and of course this is only my opinion, the objective here is to point you and to push you into those patterns, specifically those advanced pattern formations that I use, of course, and try to learn them and to understand them and try to pick your edge and how to make money. How can I make money using this strategy? And if makes sense, good. If it doesn't make sense, you need to move forward and try to identify a better strategy for you to trade, or to create your own strategy to trade. And that's a real point. And the real point here is to share with you the patterns, and then you should be able to, because the pattern will help you in that process. The pattern will help you to develop and to create your risk-reward approach to trade them. So that being said, that's the point here. I hope you enjoy this session, and I hope to see you next time. If you enjoy, press that like button. Don't forget to subscribe if you enjoy, and to share this content. The objective, as I said before, is for those who are learning process. I believe it's important to leave that myth about 90% of the traders losing money inside the market, which is true, because they don't know how to trade the market. They trade based on sentiments and don't even know what to trade in terms of price action, what the price is doing at this point. So that being said, in my opinion, that was my opinion. That being said, I hope you enjoyed this video, and I hope to see you next time here again tomorrow or the next day after tomorrow. See you there, and good luck.